Hello and welcome to another update on Ethereum. Here on the Ethereum chart, the market has rallied in three waves. I gave you a micro support zone yesterday for potentially one more high. That one more high actually occurred. The price reached the 61.8 retracement of our resistance area at $2,573. And we can see that from this rally, from the Sunday low, the market has only really formed three waves to the upside. So it's a slightly different structure compared to Bitcoin. Overall context, of course, completely unchanged. I mean, if you watched yesterday's video, then you're well informed about the bigger picture, larger time frames. But looking here at the shorter time frames, there is a potential that this low formed some kind of a fourth wave here on Sunday, and we're now in a fifth wave extension. I'm watching something similar for Bitcoin, but on the Bitcoin chart, it looks more impulsive, potentially more bullish. Here on the Ethereum chart, it would have to be the wave 1, as shown in yellow, of a diagonal pattern. So circle wave 5 might be an ending diagonal in this scenario. A, B, C in wave 1. Then the wave 2 pullback could be unfolding now, and then we can get a wave 3, 4, 5, and so on. So this would be in the yellow scenario, something we are tracking, something we are watching at the moment. Just one more upside extension in this circle wave 5, yeah? This is something I'm tracking currently, but it depends on how the market now deals with this pullback that seems to have started. So in the yellow scenario, I cannot clearly lean towards that because the rally is only corrective. So all these rallies have been corrective recently. But we can add a support zone. So it's nothing that I'm necessarily expecting to hold. But Fibonacci support is here if you need it. Between $2,374 and $2,481. So this would be our standard support zone. And I would expect this at least to form a wave 2 correction, which means we likely see a little bit more of an extended correction here, of which this could be like an A wave. We get a B wave bounce, and then a C wave decline in yellow. Like an A, B, C structure. Yeah, this is what I would like to see. Again, the move up is only in three waves, so it's not, the market isn't telling us here it definitely wants to go higher. It can, but we really have to pay close attention to how the market reacts to one of these four Fibonacci levels, starting at 2,481, ending at 2,374, with 2,449 and 2,418 in between. From a more bearish point of view, I mean, this could easily be a couple of options even, right? So in the bearish count, this could even be an extended B wave. Imagine this here would be three waves up in wave A, B, C. But even then, this support area will be relevant, so I'm not even calling that scenario out in addition. But obviously, you know, if the decline is impulsive, we break below 2,374 in a decisive manner, then this could really indicate that circle wave C to the downside has started. This could certainly be a substantial top in circle wave B, but I would want to see a break below support impulsively first, followed by a corrective rally to confirm that. So to explain that, circle wave C to the downside, A, B, C. That C wave down should be a 5-wave move, right? So we could have wave 1 like this, wave 2 corrective rally, 3, 4, 5. So this would be our directly bearish pathway, but still within a potentially bullish scenario, given that this is a support area that we are watching on the larger time frame for this larger correction, because at some point this entire rally from the April low needs to be corrected. So once we get a break below all these levels here, then this will come into focus. So again, 2,374 is key support there from a from a Fibonacci point of view for this yellow wave 2 pullback, but any break below it also will need to take us below the previous swing lows, $2,319, formal invalidation point for that yellow scenario. And then below we even have this solid red line at 2,270, which is a previous swing low from the 9th of May. All I'm saying is these could provide some structural support, but yeah, I mean, we don't really have any 5-wave decline. So from a bullish point of view, you know, there's still a chance. that we don't have any 5-wave decline, but we also don't have a 5-wave move up, which means this area is really tricky. Also, the market hasn't really done much. Certainly not trending or anything. It's just chopping around here above this 9th of May low. But that should give you all the levels to watch. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks so much. Bye-bye.